I can't help but be very optimistic about commodities. I can't help but be very optimistic about where I think gold is going to go. Because Scott Batson, the Treasury Secretary, his largest position right before taking this job was gold. Wasn't Bitcoin, wasn't oil, wasn't silver, was gold. That doesn't mean other commodities and other things shouldn't do well. All I'm saying is clearly there's a understanding of the history and the credibility and also the reputation of the metal of being able to act not only as a safe haven, but truly as an anchor to a falling monetary system like the US dollar and other fiat currencies. And so I think we're going to see prices of metals that are likely to surprise everyone.
Historically, gold bull markets have spanned an average of 2 to 3 years. When gold has experienced an annual gain of over 15%, history suggests that it typically continues to rise by more than 15% in the following year. In 2024, gold recorded a logarithmic return of 24.1%, a simple return of 27.2%, and a real return of 21.4%. This data highlights the cyclical nature of gold investment trends, where major price surges are often tied to shifts in aggregate demand. According to macro strategist Tavi Costa of Crescat Capital, the global demand for gold and other precious metals is intensifying. He suggests that the U.S. government may soon introduce substantial gold-related policies, reinforcing gold's strategic significance amid economic uncertainty. Additionally, Costa points out that central banks are aggressively accumulating gold, signaling major shifts in the monetary landscape. Notably, China has been acquiring gold at prices significantly above market value, suggesting a strategic play. The People's Bank of China amassed 1,448 tons of gold from 2022 to 2019, then paused public reporting for over 2 years before resuming in late 2022. Many speculate that China continued accumulating gold off the books during this reporting hiatus. While some debate the origins of cryptocurrency, Costa argues that digital assets serve as a distraction from gold's true financial importance. He believes the recent gold price surge cannot be solely attributed to Western investors, as hidden large-scale purchases have also played a role. A widely discussed theory suggests that Bitcoin follows gold's trajectory with a lag, implying that Bitcoin may eventually mirror gold's record-breaking performance. As gold continues to outperform Bitcoin and the dollar.
I spoke more directly about silver because I've been involved with that. I've also been involved with zinc and lead, that we've experienced similar transactions where, for instance, Chinese parties paying, significantly more than market prices to secure metals, but this is clearly happening in the gold space as well. Gold, it's almost funny to me to see this euphoria towards crypto, and it makes me wonder who created this whole space and who really initiated Bitcoin and all that, given the fact that we don't know who did it, because it's almost like a perfect way to distract the Western societies from the bigger picture of really owning a hard asset like gold in order to protect its monetary system. And so there are a lot of big negotiations happening, that are under the table, or I should say off the radar, it's a better term, that I don't think people are necessarily fully paying attention to. One of them that I'm referring to is what central banks have been doing in terms of accumulation of gold. When you look at the price of gold itself, it's hard to justify this move we had over the last year and a half by just calculating it by looking at Western investors and others that have been reported as buyers pushing up the price, because that is not in line with the type of movement we tend to see in terms of volume. And so there has been a lot of buying that is, as you mentioned, outside of the what's been calculated when it comes to indices and other exchanges that tend to track those things. And that's quite concerning. And I would say, I'm paying close attention to what the U.S. is about to do, because I do know Trump is a big fan of gold and he's playing this Bitcoin game. But one thing I learned in my life is that when you do want to buy a significant amount of a certain commodity or a certain asset, what you don't do is announce to the whole world that you're going to do it, right? You buy it and then you tell the world, this is what I've just done. And I find it interesting the fact that people are looking at this whole story about, and again, it's nothing against Bitcoin. I just think it's missing the big picture here of what gold really is, what gold really means to this whole setting of, really historical levels of leverage that almost forces economies to accumulate the metal to enhance the quality of their international reserves. And I do think that the U.S. is getting close to some radical changes in its policies in order to do that. Their openness to talk about Bitcoin. Imagine what's happening closed doors when it comes to gold. Scott Batson, the Treasury Secretary, if people don't know, and again, a lot of people don't like to talk about him just because he worked for Soros, but pay attention to what he's doing. His largest position right before taking this job was gold. Wasn't Bitcoin, wasn't oil, wasn't silver, was gold. That doesn't mean other commodities and other things shouldn't do well. All I'm saying is clearly there's a understanding of the history and the credibility and also the reputation of the metal, of being able to act not only as a safe haven, but truly as an anchor to a falling monetary system like the US dollar and other fiat currencies. And so this race of accumulating metals and other commodities even is just at the beginning in my view. And I think we're going to see prices of metals that are likely to surprise everyone, not even myself. No, I'm as bullish as you could be, and I think I would be surprised at the end of this era.
Analysts, including Costa, foresee a gradual shift in the global reserve currency structure. While the US dollar is unlikely to lose its reserve currency status in the near term, maintaining its dominance may require a weakened dollar strategy. Costa draws parallels to the 1985 Plaza Accord, predicting an imminent, either coordinated or organic, depreciation of the dollar. J.P. Morgan Research estimates a 45% chance of a U.S. recession by the end of 2025, making it crucial to understand potential economic risks and strategies to mitigate them. Despite recent fluctuations, the US dollar index remains well below its 1985 peak, following a long-term pattern of declining influence as global central banks diversify their holdings. Given the increasing demand for gold, prices surged to a record high of $2,788 per ounce in 2024. Some experts predict that gold may soon surpass $3,000, especially if the US dollar continues to weaken. Investors looking to capitalize on this shift should carefully consider their strategy. What are your thoughts on this potential gold bull market? How do you plan to position yourself in response to these trends? Drop your insights in the comments below. If you found this discussion valuable, don't forget to like, subscribe, and turn on notifications so you never miss an update. See you in the next video.